Thanks, Blake.
All right, thanks, guys.
Pavel Hala, welcome back to F.A.C.E. How are you?
Hi, Dale. Do you hear me?
Got you loud and clear. Great to have you back, Pavel.
Okay, that's great.
Are you going to share your screen? Little green button. And while you're doing that, Pavel, I have a decent memory. Not, mainly about trades and what people are doing. Everything else, I can't find my keys, everything else. But I want to acknowledge that when you were on the first time, which was last time, you were taking advantage of not the natural gas futures market. You were buying shares in the natural gas, sector, and they had a tremendous run up until a month ago. That was a great trade. Congratulations.
Yeah, thanks. In fact, we've been incredibly bullish the nat gas equities since autumn last year, when we called that the opportunity of this decade. So the latest run was just an extension of the move since autumn last year. But yeah, maybe in the short term we were lucky, but the general trend is definitely something that will play out over the coming years, not months. So
how do you view the recent weakness? Crude down $25 at one point was from the highs, and natural gas has taken a pretty good hit too over the last month. In fact, I think it peaked maybe a week before WTI began to peak and pull back. So are these areas, after this pullback, you still believe in the ongoing bull market in nat gas? And are you looking to buy this weakness that we have in those issues that you talked about last time?
Yeah, like I said, the bull market in energy is definitely a multi-year thing. But do not, as we also said, do not expect it to look like a straight line higher. The nat gas is well known for its behavior like the VIX futures, when it's doing spikes higher only to sharply reverse lower. The point is that we expect the base of the price to move higher over the long term. And regarding crude oil, we were pretty bearish on crude oil in October because there were several signs that the market will weaken. The most obvious was the sentiment when people were calling for $100+ on crude oil, which
it wasn't backwardation then still though.
Yes, it was in backwardation, but the point is, and I can show you the chart, the point is that the backwardation, so let's take a look, for example, at WTI contango. People used to say that backwardation means the market is strong. Yes, that's true. However, when the backwardation reaches an extreme, especially from the longer term perspective, that's usually a turnaround, or the point of turnaround. You can see that the backwardation reached 4%. I have the chart in percentage terms because it's better for longer term analysis. You can see that the backwardation on WTI reached 4%. I have contango over here, so the backwardation is on the negative side of the y-axis. And that usually corresponded over the past 20 years to local peaks in the price, like here in August 2013 or here in 2008. It's not an indicator for precise timing, but that is the chart we shared on Twitter in October, and that was the reason, one of the reasons we turned bearish. So the correction is not surprising, and even if you do not follow any data, the sentiment was just crazy. I shared a tweet that it reminds me. I mean, when President Putin was calling for 100 or the price of crude oil over $100. I shared a tweet that it reminds me a similar call from 2008 when Gazprom was calling for crude oil over $200. So that sentiment was quite similar to that time, and that's the reason, maybe one of the reasons we're witnessing this correction on crude oil.
Okay. Okay, so I know I got you a little bit off topic. You came in with some VIX structure charts. Is that what you wanted to talk about?
Sure. I want to talk about VIX futures
Term
because,
structure.
yeah, this is the term structure chart of the VIX futures.
Yeah.
We are mainly focused on commodities, but the VIX futures behave more like a commodity than a normal stock, index or these kind of things. And this is also something that's been in a spotlight recently because the stock market is correcting. And you can see that this is the data. This is the VIX term structure from Friday. And it's for the first time since late January when the entire curve is in backwardation. Yeah. And this is pretty obvious, but I want to point out some details. The first one is that while the front is obviously elevated over the situation a week ago and a month ago, the back of the curve is also higher, but not as much as the front. That is normal, but when I take a look at the 5-year average and 15-year average of the VIX term structure at this part of the year, you can see that the curve the back of the curve was already elevated even prior to this sell-off, which was one of the warning signs we also pointed out on our Twitter and in our research. And that is also one of the reasons why this weakness in equities in the stock market will most likely continue. Here is the distribution of the first continuous contract on VIX futures. And you can see that after the huge sell-off in March 2020, it dropped roughly to 16, 17, which was pretty in line with the normal levels over 2018, 2019. And you can see that it's not far away from this peak on the histogram. However, the back of the curve or the mid part of the curve was much more elevated even prior to the recent sell-off because it did not drop as low as the front. Even during the lows over July and August, it was well above the normal levels in over 2018 and 2019. Yeah. And I also have the contango development over here. Here is the top subchart is the contango near the front between the second and first continuous contracts, while the bottom subchart shows the contango between the seventh and fourth contracts. And the front was moving, it was business as usual. It even got above 20%, which was the level we often saw over 2019, 18, even in 2017. But the back of the curve, the contango on the back of the curve, never got above the peak from 2017. The peak before the Volmageddon in the early 2018. So that was the sign that the market was not as strong. The volatility market, the structure of the volatility was not as strong as it was apparent from the front of the curve. And that's one of the reasons why I do expect another spike, backwardation spike into the negative territory, even on the mid curve of the VIX futures. So that's, of course, one of the reasons why we are still careful. Of course, there will be powerful rallies over the coming weeks. That's totally normal. But
Santa Claus maybe rally into the winter solstice and the Fed on the 20th.
Who knows? But right now, the data, the high frequency data remains very, well, not weak. Our, equity model is neutral. But the point is, it's very unusual to see the model to be neutral after such a sell-off over the past week. So I wouldn't bet on Santa Claus rally this year. Maybe it will look like more like 2018 when we got a rally after the Christmas. So who knows? The situation in the very short term, can be very unpredictable.
Bottom line, there's another shoe to drop in stock indices.
Yeah, definitely. And even if you do not look at the data, the sentiment is pretty clear. It seems to be that everybody's bullish. Everybody's looking to buy the dip. There is no real panic in the
even
market.
long-term bears, I've commented on long-term bears are saying, we'll get a 5% sell-off. We've had it. Then a new highs in January or a layup, and then we'll have a more serious correction.
Yes.
Do you think that's a possibility? New highs and then a more serious correction? Or would you be looking more like for retracements of the first wave down?
I think the retracement is more likely, but this is just speculation. As I said, I prefer to stick to the data, and right now the data remains pretty weak, even in the very short term. So we may get another flush lower in the very short term. Of course, there will be a bounce. The rallies during these large corrections can be brutal. But in the medium term, I still think we will head even lower. So,
medium term. What does medium term mean to you? 6 months?
Months, definitely. Longer than a month, less than a year, that's medium term. But once again, I prefer to stick to the data. So maybe we will get a strong sell-off and the recovery will come sooner, or it will be more of a multi-month drawdown, something like that. It's hard to predict right now, but the point is, and that's something we also told our users, that it's been a long time since we got a 10% correction. 10% corrections are pretty normal. Even in after the recession in 2008, there was a major correction in 2010 and then in 2011. And this is something we have not seen yet since.
So there's a whole generation of traders that have never seen an extended decline.
Exactly, and I would say they have never seen bear market, because the event in 2020, that was not a bear market. Maybe in a strict sense that the price of S&P 500 dropped more than by 20%, but the valuation reset never happened. And I'm not calling for a bear market. Our long-term data still favors the bull market, so that's not what I want to say. But some large volatility spike, that's something that is more likely. And definitely many people are unprepared for this, because there's extreme leverage, and even people who are not into finance are trading nowadays, and it seems that they consider the markets to be like free money.
How about the commercials? There'll be a football team out on the field, and some one who doesn't belong there will jump into the huddle, and they'll go, "Well, are you on the team?" And they'll say, "No, I invest in QQQ." Have you seen that commercial?
No,
it's been running for a few months.
No,
and then before this crypto break, you have Tom Brady trading crypto on an iPhone, and you have Matt Damon saying only the brave.
Yeah, I saw that commercial on Twitter. I'm in Europe, so I do not watch TV. Basically, I don't have TV, but I saw these commercials like Matt Damon on Twitter. So this is really crazy, and even without TV, I saw it. I'm seeing it all around me. Even the friends who are, as I said, out of the finance industry.
Yeah, amateurs are geniuses.
Yeah, exactly. I tweeted yesterday that many people
and pros are amateurs.
Yes, I tweeted yesterday that many of my friends are heavily invested in Chinese
Crypto.
stocks, especially Alibaba.
Chinese. Wow.
Yes, and that's crazy. Of course, they are holding. They have large losses by now, and I simply cannot understand this behavior. So. That's just a small part of the data. The sentiment.
Everyone has to learn lessons on their own, don't they, Pavel?
Yes, exactly.
I mean, they have to get hit in the head with a ball peen hammer to know it hurts.
Yeah.
So, okay, so this was a major message that you had for us today, Pavel, and I'd heed it because what I saw last time. Was there anything market-wise you'd want to discuss, or you want to take some time to show your website and how people could follow you and perhaps get involved with you?
Of course. Basically, what we do is that we're developing analytics for financial markets, especially for commodity markets. This is the app, the Spreadcharts app. You can find it on spreadcharts.com. So if you open our website, you can see, what we do, what our software is about. And you can, of course, sign up for our software. It's also available in free version, and the free version is quite powerful, unlike some other softwares that are very limited in the free version. So even in the free version, the Spreadcharts is very powerful. You can access all the data, and also we do not have any annoying advertising even in the free version. So you can try it for free and see for yourself.
Okay. Well, Pavel, great call on natural gas, and there's some insight on what you're sharing today that maybe we shouldn't be in a hurry to re-enter stocks right now until what would you be looking for to tell you that it's close to over, like VIX 50, 60? What's going to tell you that there's been enough of a cleansing in the market to start tiptoeing back into it?
Yeah, so like I told our users many times, I personally have a Bayesian model for the equity market. It's my personal model. I developed it in 2015 when I was still, portfolio manager. And that's what I use to, look for the balance between the opportunity or profit potential and the risk in the market. And that's how I will spot the bottom in the market. At least I hope to. And my point or my goal is not to spot the exact bottom. I prefer to be late. I have no problem being somewhat late than being too early. That's the lesson I learned over the years. And what I want to see for the stock market to bottom is definitely some kind of volatility spike, especially in the structure of the VIX. So I want to see really high backwardation on VIX futures. I want to see some turnaround or clear turnaround in the bond market, especially the credit spreads, the corporate bonds. These markets are still weak. So I want to see definitely an improvement here, and that's just speculation. The Chinese equities or even the Japanese equities they are still quite weak. They are trending sideways. So the weakness came from Asia, definitely, which is, by the way, similar to 2020. It was very similar back then. So maybe I want to see this part of the market to bottom first. I don't know. This is not a requirement, but if that happens, if the Chinese market turns higher and the S&P 500 continues lower, so such a divergence would be definitely a welcome sign. So this is what I'm looking at, and once again, I do not like to making predictions where the market will bottom, because it's just speculation. I was
going to change your last name and call you Nostra Hala. No, you don't want to be.
I'm not. I do not. I try to stick to the data. To have my predictions and decisions to be based on the data. Not on some speculation or tips.
Yeah, it sounds to me like you've learned all the lessons.
Yeah, definitely.
And sometimes more than once, like me, right, buddy? So anyway, I really enjoyed starting the week off with you, Pavel. Some great insights about, there might be a nice little reaction to sell in this market. And I appreciate you sharing your work with us, and wish you, happy holidays and a great trading season going into year end and beyond. And would love to have you back.
So thank you. You too.
Appreciate your work, and thank you for being with us and giving your time today, Pavel. Thank you.
Thanks for inviting me.
Okay, so that's gonna be a wrap, everybody, and you could find Pavel. His website and his Twitter handle are the same, spreadcharts.com, Twitter @spreadcharts.com, and check him out. That's why I bring in people like Pavel, for you guys to, add some new tools to your arsenal of trading. So remember, don't just count your pips, count your blessings, everyone. You're welcome. Gorkum's thanking you, Pavel, and Monica. Interesting stuff they're saying. Galaxy. So have a great day, everyone. I'll see everyone for Turnaround Tuesday. Adios.
Bye.
Thanks again, buddy.
Bye. Thanks. Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.